In this video, I'm going to talk about a specific trading strategy that you might consider going into J-Pow Day. Keep in mind, if you want all my alerts on trading, we've got a coupon code for the Stocks Insight course expiring this upcoming Tuesday. Email us at staff@mekevin.com if you have questions. In the meantime, I'm getting ready now to head to the House Hack Roadshow. House Hack Roadshow, we will be meeting with investors in Oklahoma, then we're going over to Miami, Orlando, Tampa. After that, we're going all the way up and around the East Coast, and we'll be in Toronto. So if you want to meet us in person for the House Hack Roadshow, look forward to meeting you. Just make sure to go to househack.com/RSVP. The other locations we are going are Atlanta, New York City, Richmond, Toronto, Chicago, Denver, Dallas, Houston, Austin, San Diego, and Long Beach. Again, go to househack.com/RSVP to see that. And again, Stocks Insight Group expiring Tuesday. I send all my trade alerts. Can't guarantee they'll always be profitable. This was yesterday. Hope to make some money today as well as next week for J-Pow. Let's get into it. Will the Federal Reserve ream us and absolutely destroy us next week? Well, in this video, I'm going to break down that thought. And keep in mind, my positioning is still mostly cash. I'm relatively cash heavy. I did open some positions again after some tax loss harvesting, which is great because now, as we get gains in trading, we can offset some of those losses. And after all, I was able to buy back for a lower price, so win-win. Still cash heavy though. And so why is that? Because after all, this week, we got really good earnings from the majority, 40% of the S&P 500 by market cap, that suggested the consumer, at least now, is still doing well. And forecasts are still doing well. We're now nearly 4 weeks into the second quarter of the year. The economy's holding up. Real GDP estimates are still sitting at 2.7%, although our initial read on GDP for Q1, which came out yesterday, came in a little soft. 1.6% with potentially an increase in prices paid. Not great. So what does that do for the Federal Reserve? And what do we expect Jerome Powell to do to us? Are we going to get J-Pow'd tomorrow? Sorry, not tomorrow, next Wednesday? Or what do we expect will actually end up happening? Well, let's think about that. First, I think it's worth setting this baseline. You gotta establish this right here. So I know this looks like a little scribbly, but I'm gonna do my best to explain this very simply. Okay, so this right here is a schedule of CPI inflation report releases. These in the box here are done. We've already gone through these releases, and we really had a sad face release, and sort of a neutral face release. In other words, we're kind of like, this isn't great. In fact, Jerome Powell has gone as far as saying, hey, you know, we haven't gotten any more confidence that we're on the right trajectory. In fact, the PCE numbers we got this morning somewhat suggested, we could be seeing a little bit of an uptick in some of those core numbers. So, as Jerome Powell said, it's the second half of the year that usually comes in lower, which is exactly what happened last year. The beginning of last year, we're like, oh my gosh, January, everything's so hot. And the second half of the year really chilled out with inflation substantially. So we gotta wait almost for this July, August, September, October, November. We gotta wait for those reads to come out, and we don't even get the December read until the beginning of 2025. So this is where we have this hopium of being happy. But right now, we're starting off with, if I sort of averaged out all of these faces, mostly like, what's going on? This isn't good. Like a second wave or not. So J-Pow is going to come pow us on Wednesday. But what is he going to do? Well, I like looking at my leading indicators to see what he's going to do. And not always right, but we try our best to provide information and strategies around this. And so I like looking at the 5-year break even. Now, if the 5-year break even were still skyrocketing like it was last week, all the way up at a range of about 2.57, we basically have been going straight up since about December. That's roughly what the 5-year break evens looked like. I'd be a little nervous because we'd have a scrunchy face and a 2.57 5-year break even. That's so great. Fortunately, that just legged down. Kind of looks a little bit like this on the chart. We're at about 244, which it's not great. It's not as low as where we've been when we were having good inflation reports, but it's okay. 10-year treasury sitting somewhere around 4.67. So we have some real potential of markets creating tightness to push inflation down. And this goes into Jerome Powell's thinking. So I really want you to put J. Powell's hat on for a moment, okay? So remember the following. We're going to list these out. Number one, J. Powell told us, now obviously he could be lying to us, right? But he told us that Federal Reserve credibility matters a lot. We know their cred is hurt because of transitory inflation, right? So we know their street cred is hurt. Okay, so let's think about that. If their street cred is hurt, they're going to want to rebuild some credibility, right? So what are some other things that they've told us? Well, they've told us that we believe we're at peak. They've told us that. They've also told us we expect to cut rates this year. So you have a Fed that's actually biased to not flip-flopping again and affecting their credibility. So, street cred hurt. They say we believe we're at peak. They never declared victory, which we knew they wouldn't do that because that would be bad, especially if we ended up getting 3 scrunchy face inflation reports in a row like we did. Not great. And we expect to cut rates this year. These are statements we've gotten. Now, while their projections say 3 rate cuts, markets are only pricing in 1.3 rate cuts. But remember, starting to cut rates this year does not mean we have to do all 3 this year. We could totally postpone the others to next year, maybe do 1 cut this year. I kind of still think there's a chance we're not going to get any cuts. But this video is really about, hey, what do we think in terms of J. Powell giving us the big old J. Powell next Wednesday? So, street cred hurt. We believe we're at peak. We expect to cut rates by the end of the year. And second half inflation should be lower. Okay? At the same time, we've seen some signs of GDP weakening, though consumer spending strong. And one of the, some of the reasons we had that GDP weakening, a lot of that was driven by inventories and exports. So inventories pretty common now that supply chains are pretty healed. Companies don't have the urgency anymore to stock up as much in case there's a big wave of demand. So even though consumer spending is strong, we don't want to rebuild all these inventories like we're prepping for COVID again and the COVID shortages because it's expensive, it hurts margins, and it doesn't look good. It hurts that free cash flow. So we want to sort of minimize how much money we're spending building inventory. Obviously, inventory also decays over time. That's how it hurts margin, right? Somebody has to count it and account for it, and you have to store it, and you have to make sure it doesn't get stolen, all this. So there's some explaining of GDP that can be done. But the reality is pricing is still kind of inching up, and it's not good. PCE, we had a little boop up there on some of the core levels and some of the year over years. I'm going to keep this simple, okay? So we know, so these are some of the facts that we know. So we're going to write down first half inflation a bit warm. We'll call it a bit warm, right? All right, great. So these are some of the facts we know. And so when we think about Wednesday of this week, we think, what is J. Powell likely to do? Is he going to tell us, we think, it's just a seasonally hot January and February and we'll brush that aside? No, we don't actually think he'll do that. Why? Because the last time we heard from J. Powell last week, he said, we haven't gained any confidence. The market actually rallied after he said that, which was really weird because I'm like, when is the market going to wake up again to pay attention to interest rates again? And it doesn't seem to have an enthusiasm to do that at this point. Fine, whatever. But these are facts that we know. And now we speculate. Let's write that down too. We know that the last time he spoke, which helps us, last time, not more confidence. Okay, great. So now maybe we can put together a strategy. Assuming all of these facts are true, we can think that J. Powell's going to want to preserve his credibility. by preserving his credibility, he's likely to maintain, we still hope to cut rates this year. Now, that doesn't mean 3 cuts. It just means, they still hope to cut rates this year, right? That would preserve his credibility. And so then we just go, quite frankly, back to, we're going to wait. All right, so how long do we wait? Well, remember, even if we get one good inflation report does not make a trend. Y'all remember that? We've talked about that many a times before. And so what we really have to do is have multiple inflation reports in a row that are good. All right, so let's go over here. Let's say, best case scenario, we start getting good reports. April 10th, May 15th, probably by June 12th, we would have enough data to say, okay, we've got enough to confidently say, yes, sirree, we indeed can start lowering rates. So you could be ready if you had 3 good inflation reports in a row. But I don't think that's likely. I think it's more likely you're going to get more of these scrunchy faces for a while. So we'll go with a blue, we'll just make it a green color here. There we go. We'll go with, let's say that's scrunchy, and then finally we start getting happy reports. We're probably not cutting until the earliest September, if at all, before the December meeting. Right here are the meetings, by the way. Summary of economic projections, December 18th, September 18th, and June 12th. The May 1st meeting, July 31st meeting, and November 7th meeting will not have summary of economic projections. So in other words, people are going to be paying very close attention to everything Jerome Powell is saying rather than specifically what he's doing. Although, of course, reducing the quantitative tightening, reducing the level of that is a form of stimulating because you're taking less money out of the system on a monthly basis. So something to keep in mind. All right, interesting. So we still hope to cut rates. We're going to wait. What are we probably going to wait for? Probably going to wait for at least July. So we have to sort of buckle up to the idea of, we're at least 3 to 4 months away from starting cuts. But none of this says that Jay Powell is going to flip on his credibility of hiking. That's the big question. Will we hike? My expectation is no. Why do I think that? Because again, he said, we believe we're at peak. We know they're coming from a place of hurt credibility. And they said they're at peak. Yes, inflation is a bit warm, but that means we could solve, likely, or hopefully, by just staying at a stable level of inflation or of interest rates for a longer period of time. Okay, great. So we don't actually have to hike. We just have to wait. So I think the Jay Powell next week is going to be blunt. He's going to come, look, obviously we haven't gotten the confidence yet. We've had some hotter reports and we've had some mixed reports coming in, but the labor market's still strong and the consumer's still strong. Those things are true, but they can turn on a dime. So that's one of the reasons I'm still, way more cash heavy than I have been, but I'm also, can we just keep growing from where we are? And the reports this week were really, 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 really good, okay? Like even Facebook missing by 1.3%. I'm gonna have a big Facebook video coming out on that. Even Facebook missing by 1.3%. It was still a really good report. Okay, so my bottom line takeaway from this is gonna be set up like this. Here's how the trading, I think, goes. All right, you ready for this? So you're gonna have Monday, Tuesday, Wednesday, Thursday, Friday. I believe that on Monday, Tuesday, if you have a rally, so if we go into Jay Powell, rally, you probably want to go puts for Wednesday. Now, if we go sell into Wednesday, I'm going to probably set up for calls on Wednesday. Now that's trading. It's a trading strategy. It's like I try my best to come here and give opinion on what might happen, and then people love hating on me when the results come out and they're different from what I say. But I'm giving a strategy, and so take that for what it's worth. But I don't think this is a meeting that we have to be so heavily concerned about hearing about a hike. They're not going to actually hike. The question is, would he sort of plant the seed that they might hike? I don't think so. I don't think that's necessary at this point. It could lead to too much instability in the bond market, and if you cause more selling in the bond market because people think rates are going to go a lot higher, then you actually hurt liquidity and funding for the government at a time when the Fed wants to kind of be like, all right, we're going to start QT because we're getting concerned that there might not be enough liquidity to keep buying government bonds to keep the government debt funded. So, long and short out of everything, that's my trading strategy going into next week. Obviously, I'll continue to send my buy and sell alerts to everybody in the Stocks and Psych group. Hope you join it. We've got a coupon code expiring the day before the Fed meeting. And then on Fed meeting, we have the expiration of House Hack. Thanks so much for watching. And, that's the fundraise that expires, househack.com. At the top, you can click the investor link to see the PPM and everything. Thank you so much for watching. Good luck, everybody. Have a wonderful weekend. We've got a bunch of road shows coming up. I'm heading over to those in a few moments here. We'll see you soon. Thanks. Bye.
Why not advertise these things that you told us here? I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.
Even though I'm a licensed financial advisor, licensed real estate broker, and becoming a stockbroker, this video is not personalized advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show shall not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purposes of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services we may benefit from. I also personally operate an actively managed ETF. I may personally hold or otherwise hold long or short positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuer other than HouseHack, nor am I presently acting as a market maker. Make sure if you're considering investing in HouseHack to always read the PPM at househack.com.